Hashtag GizzyCredit. Hashtag GizzyCredit. GizzyCredit. Anything you want, then you can get it. Don't get scammed, cause then you'll regret it. Hollywood legend. No longer gotta look pathetic. GizzyCredit.
What's good, my people? Your boy GizzyCredit here. Shout out to you guys. Almost February, the next 3 days or so, 2 days. So shout out to you guys. Thank you all for logging on today. I have real estate finance expert Jeff Van Note. A lot of you contact me. A lot of you in real estate, mortgage, want to get into real estate investing. Those of you who contact me and say, hey, I'm looking for real estate financing. Do I need to build out my business credit so I can get financing? Or I got this property that I need extra financing for. And I'm like, yes. And I'm like, hard money loans, private lending, all this other stuff could be utilized. So I have one person for you who's been active and doing real estate for a long time, or more than 10 years, probably. Is that right, Jeff?
Yeah, don't age me, but yeah, I'm going on 14 years. Now,
14.
So, yeah.
14 years. So definitely is someone that you guys want to know about. Another one, the GizzyCredit team that is coming through for people and is up point, educational. Is going to let you know how it is. Anyways, I have Jeff Van Note. Shout out to you, Jeff.
Hey, thanks for having me. I appreciate it. I feel like I'm on I was just like when your music was going on, I felt like I was at a club in Manhattan. And, no one's at a club in Manhattan anymore these days. So you kind of brought me back to my, my 20s.
Oh, man. You remember? I mean, you're a pretty young guy, right? How old are you?
Yeah, I'm 34. So
Yo, come on. You're young, bro. I'm 40 years old. Like,
listen to me. One Oak was my familiar with One Oak and all the other clubs in Manhattan. So.
Oh my God, yo, that's a question that I have to ask you. Is New York City going to come back from all the people leaving?
So look, New York is as resilient as it gets. I look at how I can impact and help people right now. So I look at how I can help people immediately in New York, and then how I can, really solidify my legacy in what I do in real estate lending, and use real estate lending and my experience through the ups and downs of the markets, for the past 12 years, to help be a catalyst to bring New York City back. I can tell you that a friend of mine is running for mayor in New York City. I'm on his advisory team. I'll actually be airing a couple episodes in February with him. He'll be picking my brain, interviewing me on, my approach, what I would do if I had, full autonomy in making those calls. But right now, what we need to do is just still weather the storm.
Yes.
The storm's still going on. I think a lot of weak hands got shaken out. A lot of smart money got shaken out in New York City. But like anything, there's always somebody waiting to get into New York City. So I'm not sure where the masses are going to be coming from. But New York City, it never sleeps, and I don't ever see New York City dying.
You don't ever see New York City dying. Wow. I'm one of these people that lives in Jersey but hardly ever goes into the city. I have no business in New York City. Like,
yep.
I hate, you know why? I think I used to work in the city. And I used to travel from like 7:30 in the morning to 8 o'clock. I used to live right off Fairview, Cliffside Park. I used to take the bus into New York City, and it was just a drag just going in there, coming out at 4 o'clock, being in that traffic. I mean, New York City, you have to like love it to be in New York City in order to like enjoy it to the fullest. Of course, going into the city at nighttime, weekends, who doesn't want to go? I mean, any day, to be honest, any day there was something going on. But with today, with the market, with COVID, I don't know. It's kind of hard getting people in there.
Look, you're right. You're exactly right. And I think traffic patterns will make or break your experience. If you hit traffic going in of or getting out of New York City, you're probably not going to want to get back. I was only in New York City doing business from 2007 through 2013 before I myself moved back to New Jersey. And I moved to Hoboken to still be able to service the New York market and so on and so forth, but also bring my, contacts to New Jersey. You'd be surprised. Like, you're the norm. A lot of people that live in the Jersey City all the way up to Fort Lee area, very rarely go to New York City unless they
Yeah.
work in New York City. Um,
Yes.
and what's interesting now is the people that are in New York never came to Hoboken, Jersey City because they didn't need to. But now that New York is on lockdown, now they're all starting to come over to New Jersey to wine and dine. So it's very interesting, the new patterns and trends that I'm seeing.
Did you get any business from New York City folk or New York State folk coming over to Jersey?
I always have. Yeah, I mean, I've been bringing people over since 2014 when I moved back here myself. Just from the price point, obviously for schools, obviously more bang for your buck to avoid paying, New York City taxes. So yeah, absolutely. I mean, it's funny. Like people in New York know me as the Jersey guy, and
Okay.
people in Jersey know me as the New York guy, which is interesting.
Well, didn't you tell me that you started your career in New York City?
I did. So I started in the Bronx in December of 2007 at age 20. So yeah, and I worked for a Jersey mortgage company. So everyone knew me as, Jeff from Jersey who does mortgages, right?
Yes.
And then when I moved back to New Jersey, everyone in New York was like, "Oh, I know this guy. I want to move to Jersey. Oh, I think he's from Jersey. Let me call him." So yeah, absolutely. It's funny how that works.
Is the so you're into deep in the business where people know you as the lending guy. Do you still
Yeah.
get a financing business like for mortgages and all that stuff?
All the time. I mean, I have before I turned 30, I had closed over 1,000 clients just for residential mortgages,
Wow.
almost a $500 million of business, and I met or personally spoke to every single one of them. 100% of them were word of mouth referrals. I didn't buy one lead ever. So everyone I know that I closed, like, still calls me, still contacts me, asks me for my advice, so on and so forth. So yeah, to answer your question, I get calls all day long, and look, people respect and value my opinion because I did right for them. Early on when I really didn't know the business, I just knew how to work hard and treat people right. Now that I've elevated my career and branched off in different areas of real estate finance, you never know what somebody needs, and the more avenues you have to help them or provide value, they want to definitely give you a shot because you did right by them in the past.
How did that come along with the doing the hard money private lending? When did you started think hearing about it, and when did you say when did it click like, oh, you need this, if I can't do it, then this, maybe you need this?
Yeah. So the first time I ever even heard the phrase hard money was in 2010, and I bought a property. And this is all public information. You can look it up. I bought a property on Vice Avenue in the Bronx, 1535 Vice Avenue. It was the hood, like it was super bad. And I partnered up with my partner Mario at the time and our real estate attorney, who I gave all my business to, and he lent us like $400,000 at 18%. This is in
Oof.
2010. The market was collapsed. No one had money. Luckily, my attorney had millions and millions of dollars, and it was kind
Yes.
of a win-win for both of us. It was a great experience, but at the end of the day, I was paying $6,000 per month in interest. Which again, look, at the end of the day, I would have been able to get into the deal without the hard money. So it was what it was. I made like $10,000 or $15,000. 2.5 years later, I got caught in trying to sell it during Hurricane Sandy. So it wound up taking 7 months longer to close. So that's another 42,000 I would have made. And then I
And this
funded
was
my first.
this was your first train ride?
That was my first hard money train ride of borrowing hard money. And then in 2011, so a year after I bought it, I actually participated in a hard money loan. We lent somebody like $180,000. I put up $15,000 at 12%. So, look, at the end of the day, everyone says they, know hard money. I've been
Hmm.
on all sides as borrower, lender, broker, underwriter, you name it. And I think hard money is the best tool to succeed when you have either no other options or time is of an issue to close a deal. Again, and I still borrow hard money on certain deals. Luckily, we have a lot of capital now, so I don't need to borrow hard money, and I'm not buying any real estate right now for the time being. It's just not my business model. I know lending, so I stick to lending. Um, but hard money is a great tool to be used with people that understand it.
And of course you've been through all the volatility in the market already. What, 2014? So that's already the 7 years in it. During that time, when was the best time to borrow money?
So how do I say it? So when I started in December of 2007, to give you an idea, let's
Okay.
just call it from December of 2007.
When everything was falling apart in the mortgage industry, you went in it.
Yeah, and I was 20 years old. Actually, still playing football for the first 3 months, and then I got cut, and then I went full time into mortgages. But I remember I didn't know anything, right? So every day was a new day. So I couldn't give an outlook or an opinion because I didn't have enough, ground and pound experience under my belt. I kind of just
Yes.
think of it as like I hopped on the lazy river, and I let the lazy river kind of just like navigate and float. Sometimes you bump into the wall, sometimes you go under a tunnel, sometimes you go down a slide. That's kind of what the mortgage business was for me, really, until I'd like to say, I'm going to call it 2016. And I'll give a reason for that in a second. But to answer your question, as far as navigating those turbulent times, you have to think outside the box. You have to be a critical thinker. You have to be a problem solver. You can't take no for an answer. But with that also being said, you also have to know what the heck you're talking about. You need to know guidelines. You need to have outlets, and you need to deal with people that, if you have to go to war, that they're going to go to war with you, and they're not going to just close up shop or, walk away or not have your back, right? But to answer your question, as far as like me personally being on the lazy river, I felt like the market had come for me full cycle from December 2007 all the way to December 2016, let's call it. We saw rates go from 7.5% on a 30-year fixed rate when I started, now down to 3.25% at the time, which was the lowest rate I had ever seen in the 2016, 2017 range, there or about there, right? So, people started lending again. More brokers started getting back into the market. Non-qualified mortgage or non-QM loans came back to the market. Now I'm like, I've seen it all now, non-QM loans, while they're not often referenced as, stated income, no document loan products, they are. Now they're just pigs in a blanket, if you will, with the blanket being the word non-QM. Yes, there's a little bit more validity to them, higher credit score requirements, but at the end of the day, you're still lending money to people that don't show income, right? So I was like, you know what? I need to take a step back. I obviously accomplished a lot. I did a lot. I let my personal life and relationships suffer. So let me take a couple steps back, if you will, and see what the next move is for me. So that's really where I felt like I saw a full cycle, if you will. But with the last, year and a half or so with COVID, and now interest rates literally being at 1.875 to 2.5%, now it's a whole different world, which makes me even more concerned for people moving forward because, how much lower can rates really go? You know what I mean? Like, it's just kind of like a big unknown, and no one in America has ever experienced this before. So only people can give opinions, but they can't give opinions based on experience because no one in our world that's alive right now has ever seen this type of market before.
So, of course, when you kind of qualify for a mortgage from a regular lender, when it comes to private money, I mean, what is it? Is it a hedge fund? Is it someone like you that you own private money that comes like that? What is, in essence, hard money, like the phrase or the wording of it? Is it used differently?
So the true hard money meaning back in the day meant high net worth individuals pool capital together and lend money at rates higher than bank rates, right? So, let's just say it's 1995 and you need private money, regular normal interest rates were at like 8 to 10%. Hard money was at like 15 to 18%, right? Real hard money rates never really adjusted downwards when the market adjusted downwards because it's still private capital, right?
Yes.
So our personal hard money is all private capital, earned investment income capital, right? Where I call the shots, I send the wire, I work with our counsel, I say yes or no. I also have an avenue that I broker capital or hard money loans, if you will, to larger funds. So let's say big commercial real estate funds that buy, 10, 20, $30 million buildings. They can't find anything right now that suits their criteria. So rather than them sitting on $30 million of liquid capital, making 1% or 2% on it in a checking account, they'll say, hey, Jeff, I'm giving an example. We want to put $1 million out right now at 10%, go find those deals, whether it's one deal for $1 million or 4 deals for $250,000. You broker that money out. We'll take the interest, you keep the points. And then I also have a straight broker model where, depending on the deal, if it's a fix and flip deal, I really don't like fix and flip deals. I'll help people get them, but everyone's doing fix and flip deals now and selling them to the same institutional lenders. And I'll give an example. I got a call 2 days ago from a friend, an industry friend, and the person he was selling his house to needed a fix and flip loan, but her credit score dropped from 650 to 620, and her go-to lender, who she did 7 deals with, said, "Sorry, can't help you. That's not real hard money. That means that they're taking the loan and selling the loan." Like, I'm doing a deal I'm closing tomorrow for someone that's probably watching this or that definitely follows us both on Facebook. Yeah. And, the credit score is in the low 500, and I'm lending him $120,000. I don't care what the credit score is because I'm fully protected by the asset, right? That's real hard money. People hide behind hard money, fix and flip lending because they don't know. And it's not necessarily that it's their own fault that they don't know, but there's no true education on the proper terminology of what things actually are in the real estate world, unfortunately.
And that's when the difference between that person and a person who does hard money per se. They don't, because a lot of people, even hard money lenders that I know, I mean, they still check your credit, and you got to have some type of, at least 580, 620. At least you got to look like you pay some type of bills.
Yeah, but, so I don't check credit at all. I deal with the person in relationship, and that's who I am. Like, I'll never lend to anybody that I don't know. Like I say, I know you. We've done business before. Whatever. You've sent me other deals and other types of work that I do. I'll pretty much help you out with what you need, as long as it's within reason. Obviously, the money has to be protected. So I don't have a formal application process. We closed 3 deals this month. We actually closed a pretty cool deal. I actually did my first direct lending on an NFL contract on a guaranteed bonus that's being paid out. I know nice. NFL guys, and a player needed a quick advance. So we lent the money for 30 days, and he's paying us back with his contract bonus. So, I have the full creativity of doing that, and obviously our money is secured by the pledge of the contract. So, that's real hard money. I didn't run his credit. I didn't get an application on him. I literally got a copy of the contract, got a copy of the bonus agreement, had it pledged, and then we're good to go.
And when you say as a real estate investor, though, the way you protect yourself is by looking at the deal and looking at the return on investment. Is that what you go by more than?
So look, yeah. At the end of the day, yes. The smaller deals. Me, I would rather broker larger deals and personally lend on smaller deals. Because the more you lend, the more you potentially have to lose, right? Okay. The less you lend, the more likely it is you'll be able to get repaid back. That's just from experience of losing a lot of money by doing this the wrong way for a bunch of years, because I didn't know. And I lost a lot of money lending to people that I thought I knew by not having the proper legal procedures in place, thinking friends were friends, thinking business partners knew more than I did. You got to remember, 8 years ago when I started lending money, I was 25 years old, right?
Yes.
I didn't know anything. I thought I knew a lot, but I didn't realize, how ugly this world could be. So now I've buttoned up all of our legal documents to fully protect my investors and myself. So like I said, so
it's all on your agreement that you go by.
Yeah, absolutely. And my agreements, they're ironclad. We're fully protected. And at the end of the day, I say to my borrowers, you tell me what you want. You tell me, what terms you're looking for, how long you want the loan for. I'll give you that, maybe even something more favorable if it meets, the return that we're looking for. If not, I could always find another outlet for you, right? So I can work to that lender, broker, advisor capacity. It depends on what you want to hire me for. If you need something done that no one else is going to do, fine, but you're going to pay a premium for that.
There you go.
You can't tell me that you got offered a 10% rate with no points, but the lender can't close your deal because you have a 600 credit score, and now I'm offering you 12% and 2 points because I'm actually going to be able to lend you the money. So yeah, you're going to be paying more because not everyone could do this deal. Now, if you want to give me the deal that everyone else could do, yeah, I could be at 9%, 9.5%. You know what I mean? So people always feel like they want to get the best deal and they want to shop, but oftentimes they look at the smaller picture rather than the bigger picture.
And of course, the difference between you, because the word hard money gets thrown around all the time, especially when you can't, like the situation where you can't qualify or your credit score goes down, and then you got to go and find somebody, because
Yeah,
everybody's.
and that's all a misconception. I can tell you for a fact, I have borrowers that have millions of dollars in investment accounts, millions of dollars of real estate projects, and they call me just to leverage their capital. Or maybe they have a violation on a property and they're waiting for bank financing. We need to lend them a couple $100,000 just to bridge this current scenario that they're in. Maybe somebody doesn't want to sell a stock and pay capital gains of 40%, for example, right? So they borrow that money at 10% or 12%.
Okay.
I've also done deals where, we'll lend somebody $2 million on an $8 million asset just because they want a tax write-off or they need the money in a week. And yeah, bank rates are at 3.5%, but they don't have 100 days to wait and they have a new deal lined up and they need the capital immediately. So, it's all a misconception. Most of my borrowers actually have credit scores over 700.
Yeah, that's good. That
know?
means they could look trustworthy on their credit, but on top of that, you need to protect yourself with that agreement.
Here's
And
what I say: a credit report, in my opinion, means nothing about anybody.
okay, but you're not like any other, hard money lender. A lot of other people who say they do hard money, they look at your credit.
You know why? Because they don't have experience, and they don't have the experience that I do, right? So, let me give you a perfect example, right? Let's role play. Let's say I talk to you. I'm like, hey man, what's your credit score? And you're like, oh, it's 600. Automatically, oh, that's terrible. Credit shitty, whatever, right? Grizzy's got shitty credit, whatever, right?
Yep.
Now I'm like, well, let me see your credit report. And let's say you have no credit, but you have a medical collection because your insurance company didn't actually pay the premium they were supposed to pay. Well, your credit score is low, but you only have one negative thing on it. Meanwhile, you don't believe in credit. You pay for everything all cash. Yeah. Right? That's not really a 600 credit score. That's like an oversight or a miscommunication. Now, you might have somebody that's never missed a payment on their life, has a ton of debt. Maybe they opened up a new business, never missed a payment, and maybe they have a 500 credit score because all their credit cards are maxed out. So the credit scoring model has been broken for years. And I hate to say this, and I'll say it because I've said it before, I believe that the credit scores are perfectly made and purposely weighted in order to allow lenders to charge higher interest rates and justify it.
It's you got to be in the game to play in the game. It's give and take. You give and of course they charge you an interest, and the lower the credit score, the higher the premium is going to be to borrow that money. So
bingo.
I mean that's the game that we're in. My job is to have you look like you have the best credit so you don't have to pay the most. You know what I'm saying? With your interest rate. Because a lot of people think they can get something and they don't look at the life of the loan on that interest and what they will pay on that interest. Just like a vehicle loan or a mortgage loan or any type of loan, you're going to pay throughout the life of the loan. And a lot of people, they're going to either refinance, but when it comes to a vehicle, they'll go those 6-7 years paying that car loan. And eventually they'll pay $15,000 additional, which is crazy.
Yeah, absolutely. So I always tell everybody, like, look, spend the extra time. Like, if you think you may ever want to borrow money, like, check your credit today and start working on your credit today,
Correct.
And also, like, if you're 3 months away, like, you can never start working on your credit too soon. I think people wait too long for whatever reason, or they use inaccurate credit reporting scores.
Correct.
And then they run their real credit with their car dealership or their mortgage company, and they're shocked by the results being vastly different, But I can tell people that all day long, and they just have to choose to, pick someone that they want to listen to. I'm giving them the right information, and if they don't want to listen to that, that's on them. I try and tell them what's best based on 14 years and thousands of interactions on an annual basis of experience.
Have they ever sent you their Credit Karma login info so you could check their Credit Karma?
Not only Credit Karma, I've had Experian reports sent, Equifax, TransUnion. I'm like, look, you can send me whatever you want, but at the end of the day, if you broke your right leg today, I don't need your x-ray on your left leg from 2 years ago. That's really the fact of the matter.
Correct. And what are some of the best, what is some of the deals to best use hard money on? Like, because people when they go into real estate investing and normally they'll they need to have a hard money person there,
Yeah.
just like on standby. If something is left, and some people, they're in it and then they realize, oh wow, I need additional money in order to, finish fixing this house so that I could sell it. So it's very different processes that a real estate investor will go through, especially someone who doesn't really quite know how to navigate through it using their own
Hey, you got
money.
cut off. Can you hear me?
Yeah. Using their own money and trying to see. You hear me?
Yeah, I got you. Yep.
Okay. Yeah, you trying to use their own money and navigate using their own money, or using someone to lend the money, then that doesn't, they're not going to borrow any more money from that person. So then they need a hard money loan. So what's like the best deal? I mean, what are the best deals or to actively look for a hard money loan to, like, they could get the best out of their real estate investing?
Sure. So let me answer that quickly with an example of a deal I did, right? So
Okay.
first, fix and flip loans are not hard money loans. So anyone that says they do hard money, that doesn't mean you do fix and flip. And anyone that says they do fix and flip loans aren't hard money. Like, fix and flip loans are fix and flip loans.
Ooh, I'm thinking all that is hard money that they get.
No.
Hard money. Okay.
No. Those are fix and flip loans where they're either lending the money and then selling the loan immediately 24 hours after, or they're saying they're lending the money and then another bank's table funding the deal, okay, to their own underwriting parameters. And that's where credit score requirements, ARV, all that stuff, assets, reserves come into play. That's why everyone has the same product right now. That's why I don't advertise I do those, because now it's a chase to who's going to give somebody the cheapest deal. And I'm not working for free, right? That's number one.
Correct.
So a hard money deal that we just did, as an example, was a lady was selling a house for $360,000. She had a first mortgage on it for $215,000. So she had $145,000 of equity in her house for sale under contract, and she wanted to buy another house.
Mm-hmm.
And she couldn't get her offer accepted on another house because no one wanted to go into contract with the contingency of her selling her first house in order to buy her new house, because her equity was her down payment on her new house.
Okay.
So I gave her a 2-month loan at $75,000. I took 2% interest and a 2.5% fee. So we made like whatever, $2,500, $2,800, whatever it is, which is fully tax deductible. She then took that money and went into contract on a new house and had her down payment ready. So in her case, I bridged her sale to her new purchase, and I'll get paid back in full when her home she's selling closes to her new buyer. That's
But you said bridge. Is that a bridge loan?
So it's hard money used for a bridge loan, correct?
Ooh.
Yep.
And what was the turnaround time for that?
I closed it in 5 days. We took it in on a Thursday and we closed it on a Tuesday.
And she was able to go put down money in her house, which, because right now people are overly paying,
Yep.
10,000, 15,000. I've seen on Facebook people paying extra 70,000 over asking price.
It's
so
crazy. And just to give you, didn't even do an appraisal on her house. I did no appraisal. Never met the lady in person. We spoke on the phone. I did have a copy of her credit report, and I funded the deal in no time.
You said in the beginning of our conversation, you're not doing real estate investing right now. You're not buying or fixing and flipping. Is there a reason why?
So I've never been a real estate guy. I never wanted to be a real estate guy. I know money. I know lending. I've bought and sold millions of dollars worth of properties. I own a couple properties now. It takes away from everything else that I do. I don't want to be called by tenants. Everything going on in New York City right now, it's just ugly, right? So the next properties I buy are going to be probably like a home in Florida, maybe, or, maybe buy my son's house, somewhere in Jersey.
Mm-hmm.
Obviously needs a backyard, but I just moving forward, I know there's a lot of bad things coming down the pipeline with all the evictions and all the defaults and loan modifications and forbearances, that I'm just going to stick to what I know right now, because I know lending, I think, better or equal as the best person in the world that knows lending as far as real estate lending goes and
Yeah.
consumer interaction, especially in the Northern New Jersey marketplace. So I'm just going to stick to that. There's no reason to diversify in something that I am unsure about moving forward.
Is there a, but you said, New York, New Jersey, but you don't go anywhere outside of New York, New Jersey as far as hard money lending?
I do. So we were working on a deal in the Carolinas. We funded multiple deals in Florida. I looked at a deal in Texas recently, but I know the pulse and the heartbeat of the 5 boroughs: Lower Westchester, Long Island, and Northern Central New Jersey, right? I say central, let's say call it down to like the Jersey Shore area, like Tom's River. So from
Yes.
Tom's River and fully north, I know it like the back of my hand, and I could feel very comfortable making an educated bet on the loans that we do of performance and asset values moving forward. Once I go outside of that range, and it's actually a pretty big range. I mean, you can go on 4 different blocks in Harlem, and it's a whole different valuation, right?
Correct.
So that's what I know, and that's where I'm going to stick to, because that's where I feel very confident lending money with all the other unknowns in the marketplace moving forward.
Because you know that it's going to sell.
I know it's going to sell. I know trends. I see what consumers are doing. I know people in the neighborhood. I know people in the area. I know politicians. I unfortunately New York City is a wild card. I think the mayor of New York City is a complete knucklehead. But
Yeah.
whatever. I hate politics to begin with. But I know that a property, brownstone in Harlem, I know what it's worth, and I know what I could unload it at if I had to unload it and take back the loan, right? So I just know what my insurance is, if you will, and that's why I feel confident.
Are there any areas that you see like that there's trending right now in New Jersey, New York? I don't think in New York there's not, there's all the areas have
So
been
I would
taken.
so I would say an interesting area to look at, and it is pretty expensive, but the down the shore Asbury Park area. A
Oh,
lot of
Asbury
people are
Park is very nice.
a lot of people are flocking to Monmouth County. You get a lot of bang for your buck, good schools, you're close to the shore, beaches. So COVID exposed really that area, and people are just going to keep going more south. So I would say from Atlantic City, I think the next boom is going to come between Atlantic City and Tom's River.
Oh,
So pull up a map, and I think people are going to start to buy very cheap real estate, down in that area, because you can go down to southern parts of New Jersey and still buy a legitimate home you can live in with your family for $100,000 or $150,000. That same home up in North Jersey is going to be $500,000 or $600,000.
yes.
So I think because no one's going to New York City, proximity doesn't. Right now, we're going to see a boom in real estate under $400,000.
In that area. I mean, that's whoever wants to live down there. But hey, if it's still COVID, if there's still people being locked down, if you're gonna work remotely, why not live in that area?
Bingo. And again, so I think like people are saying, okay, let's spend more on our home right now. Let's buy our home. Let's buy a lesser home than we can actually afford. Let's make the home as beautiful as possible, and we're good to go. If we want to travel somewhere, we'll take a day trip. But the whole I need to be within 45 minutes to an hour in New York City is no longer needed. And I don't ever see the New York City workforce being a 5-day workforce ever again in life. I think 2 to 3 days max, and that's going to be the norm moving forward.
What are the trends that you would look that you look at in order to say this area is gonna be the area to go? Do you look at other builders doing things down there? Do you look at what investors may be doing in the area? What is it about an area that, as a real estate person or lending, you'll say, okay, cool, that area sells, and therefore I'll lend?
Really good question. I think that's part of the skill set and the experience that you can't teach. I could tell you just as an example, like let's just use an example of Hoboken, right?
Okay.
I'll call up 3 people that are 50 and above. I'll call up 3 people that are 30 and above, and I'll call up 3 18-year-olds for an example. I'm giving an example of what I would do. And I would say, hey, think of Hoboken right now. And I would take all their answers, and I would see what is the best thing I hear, what's the tell us.
You said the worst thing? Kind of got cut off there. Hello.
7 or 8 people, think parking's a pain in the butt. So the restaurants might do well, but real estate might not. So if you don't want to live in Hoboken, where could you live where there's also parking? And then I would obviously stay abreast of those trends and see where people are moving.
For those who
That's
don't
an
know who are
example of what I
watching,
do trend-wise.
from California, Texas, Chicago to Florida, Hoboken is a mile square. Okay? So a mile square, that's what Hoboken is famous for. Also, Frank Sinatra was born there.
Yeah, and directly next to New York City on the opposite side of the Hudson River.
It's opposite side of the Hudson River. You could take the PATH train into it. You'll be in New York City in 17 minutes, just on a couple of stops, and you're in New York City.
It's actually 14 minutes. I timed it. I owned the website just 14 minutes, and I don't have it anymore. But it's 14 minutes from Hoboken to Midtown Manhattan.
There you go. And how many people are living in that mile square?
There were 5,000 residential units between rentals and homes in that 1 mile proximity.
Oh, wow. I mean, it's congested
So
as hell.
multiply that by 2, 3, 4, 5, however many people, correct?
Yes. All right. So who qualifies for a hard money loan?
Yeah, everybody. I mean, anybody and everybody. There's no discrimination based on age, color, income. It really comes down to what you need the hard money for, what real estate project you're doing, the time frame of which you need the loan, and what your exit strategy is, which is what your not only ability to pay monthly is, but how are you going to pay us back in full? And I mean in full. I mean like us losing a penny.
So mainly, I mean, it's kind of hard to deal with someone who's just their first train ride. You mainly want to deal with people who have gone through the train ride a couple of times. And how many investors do people that you did business with the hard money 5 years ago, are those the same people still asking for hard money? Is hard money something that you could grow out of?
So, yes, but unfortunately, banks, and like right now my business is the busiest in the commercial space, not residential space for hard money, because residential banks, they're closing deals left and right. Everyone's a residential mortgage lender now. Commercial banks, retail centers, warehouses, restaurants, so on and so forth, they're taking a minimum of 90 days to close loans. Some people don't have 90 days, so you could always outgrow it, but it's like anything else, like, at some point in every real estate investor or person's career, they're going to need to borrow hard money. It's just the nature of the business for some reason or another. And like what I always tell people, like, look, you can shop me all you want, but when you come to me and need a favor, and if we've done business prior, I'm going to give you a much more favorable deal because we have a relationship, we have a track record together. If you give me 10 deals and you shop me on all 10 deals and you leave me for whatever, 0.2 or 0.4% or a point, whatever it is, right? And I get it, you have the right to shop, but when you come to me and need to close your deal in 24 hours, I'm going to charge you a premium because you just wasted my time on 10 other deals. When I wasn't far off a market, it may have cost you an extra $500, $800. So if my relationship isn't worth $500 or $800 or a point to you, well, that's fine. Then you've already showed me that you only care about the transaction, and now I'm going to charge you more.
Correct.
And that's really what it boils down to. Again, there's only so much money to go around. We're not looking to be, a $1 billion fund. We're not looking to, make billions of dollars a year. No, we're looking to use the money to help people complete the real estate transactions while still earning a healthy return on investment.
There you go. That's what's up. So what are the tips? I know that I named the video "The Truth About Hard Money," and I also put tips for investors out there. What tips can you give to give people who want to borrow or may need a hard money loan?
So there's there's a lot of things to consider. Let's go over my top 3 things when analyzing a hard money deal. Right?
Okay.
The first is the interest rate. What's your rate? 9, 10, 11, 12%.
Yep.
The second thing is the points. And the points are broker and lender included. So how many total points?
Okay.
third is the prepayment penalty. Is there a prepayment penalty? Like, do you have to keep the loan for 3 months or 5 months or a year, or is there no prepayment penalty? Okay. Usually, if you have a prepayment penalty, you're getting a better rate because the lender's locking in their investment for that duration, for that time period, right? And then the fourth thing is, right, and this is the biggest thing, how many months are the lenders collecting at the time of closing? So are they, if you're doing a 6-month loan, are they collecting all those 6 payments up front? Are they collecting those 6 payments up front and requiring you to still make one payment every month? So they're always going to be 6 months ahead in the event of a default. And then one thing that's, very important in my opinion, is what are the junk fees? Like somebody might be giving you a 9% rate, right? Let's say they have a $100,000 deal and they're giving you a 9% rate, but they're charging you a $1,000 application fee.
Yes.
Really, you're paying a 10% rate, right? So like on our hard money loans, we don't have anything other than a $375 fee, which covers, again, if we're running a credit report, a background check, it's our legal deposit, that actually is a cost of $375. And that doesn't matter if you're borrowing $25,000 from us or $1 million from us, $375. That's like, hey, I'm paying you this money so you could do your due diligence, right?
Yes.
Some people charge thousands of dollars in application fee, processing fee, underwriting fee. So meanwhile, you're taking out a $100,000 loan, but you're paying $1,600 in fees, So people don't look at all that. They don't look at the bigger picture. Like you have to look at, okay, look at all these factors here. Like, yeah, I'm charging you a 12% rate, right? But it's a no prepayment. You can pay it off at any time. I'll give you 9%, but I need 6 months guaranteed of interest, So people only hear what they want to hear. And because there are and then they wind up costing themselves thousands of dollars in the long run.
Well, definitely it's good to be with someone who is knowledgeable about the process because, there's a lot of misconceptions there. Just like you said, with hard money, people who sell it the next day, private money and all that. So, I mean, you really, as an investor, you really have to create a relationship with your hard money lender. Maybe this is not going to be the first time. Maybe you'll need him the second time, the third time, the fourth time. Maybe he could be the money guy. And I'm pretty sure you are the money man.
So that's so funny. So I had 2 custom paintings done of the Monopoly guy in my room, and I have a 2.5-year-old son.
Yes.
And we call the Monopoly guy the money man. So every time he's with me, he always like goes into the room and says, "Look, money man, money man, money man." So look, I don't want to be known as the money man. I want to be known as the guy that really helps people and educates people. Like, do I want to make a lot of money? Yeah, absolutely. But I want to do it the right way, and I want people to know what they're signing, what they're getting into. And look, if I don't feel comfortable lending somebody money because I think they're going to get themselves in harm's way, I'm not doing the deal. I don't take deals just to take deals. I take deals to see them through to the end. And that's just who I am. Like, I don't need to put a deal together to feel good about closing a deal if I know that deal like isn't going to work out in the long run for everybody. My goal is to have people money. My goal is to, lend money to myself and my investors get.
Can you tell when
job is to deal with responsible people,
yes,
good business people, and repeat borrowers?
Yeah, that's what I was gonna ask you. Like, can you tell off the bat when you speak to someone if they know what they're doing, if this is their first pony ride or not, so that you could be like, it's like, yeah. What do you look for when that happens? Like, what's the first thing you'll be like, oh, this guy, he's full of it or something?
The first thing you have to do, the first thing you have to do is really make sure the story adds up. And what I mean by that is, like, first and foremost, you have to see if there's desperation, right? Like, are you calling me on a desperate, like, oh, I'm jammed up, I need help, right?
Yes.
That's number one. Because obviously people make stupid decisions out of desperation.
Yes.
And then number two is, again, like, does the story add up, right? So, like, let's say you're like, yeah, I bought this house for $300,000. I put $100,000 into it, and now it's worth $900,000, right? If you tell me that might be true, but I may say, you know what, I need an appraisal to verify that this house is now worth $900,000. So that sounds like a very good deal. And I'm not saying you didn't get it, but like, is that really $900,000 or is that $700,000? You know what I mean?
Yes.
Or yeah, I did 10 deals last year. I made $500,000. I'm like, oh, how much money you got in the bank? No money. Well, how did you make $500,000 last year yet you have no money in the bank? You know what I mean? Like, and again, that could be true, but like I look for little red flags where like the story that you told me doesn't match the current chapter that I'm on with you as we're speaking, right? Also, people that say they have a ton of fix and flip experience is what I love. Yeah, a ton of fix and flip experience, but none of it's under my name. And I'm like, well, then do you really have fix and flip experience if it's not under your name? Oh, well, I had a partner. Oh, I invested in it. You know, like, again, being a partner on a deal and doing an actual fix and flip yourself, closing and funding to finish a construction and reselling are two different things, you know? So I just, look, at the end of the day, I don't judge anybody. I've been at the top and I've been at the bottom, right? In all aspects of life. But I need transparency. If we're gonna be doing business, I'm gonna be fully transparent with you, but I need you to be fully transparent with me so I can do my job properly.
Yes. When do people place the property in an LLC? Do you deal with financing the LLC because people don't want personal responsibility for that home, or normally the people that you deal with already have an LLC for that corporation? I mean, for that property.
That's a good question. So, I only require my clients to have an LLC if they're doing construction on a property. If they're just taking out a bridge loan, it's just a personal mortgage, second mortgage, and every loan I do is personally guaranteed. So I can lend to your LLC, that's fine, but you're personally guaranteeing my money because you're not going to bankrupt your LLC and then walk away, you know, doing skip to my loo down the road. It's not going to happen. You know, if I'm lending you money, I'm lending you money, and you're going to repay me back.
Correct. And the personal guarantee is not credit score driven, because a lot of people think you need to have a 720 credit score in order to personally guarantee something. You're like, no, it's just gonna go on to you.
Yeah, because I'm dealing with the person, so it's me basically making a bet or investment on the person to borrow the money, responsibly execute, and repay my money so we can do more business moving forward in the future. Or if you ever get into a jam, call me. I'll be the first person to try and help you out as long as I feel comfortable with what you're asking for.
There you go. There you go. Well, Jeff, I mean, we could do one of these again if we have more questions. Right now, just have people asking, do you do business credit funding? I mean, there's other people who do business.
Short answer is yes, if you have an established business. So right now, the only thing I'm doing business-wise is, as we are going to do together, the PPP loans, which I've been doing.
Correct.
So I have 99 current people that have applied for the PPP under my portal. I'm able to monitor that and make sure everything's moving along properly. That's number one. And then if you have an actual established business for 3 years, because that's what they look for now, banks. There are ways.
A lot of people think that they could just get this LLC right now, and then you have a good credit score, you could go and get business funding.
So you might be able to get like 25 grand, let's say, or 10 grand, depending on what you're borrowing at. But you're borrowing at a really high interest rate, So it really depends. I'm also a big believer in today's market. There's smart lending and then there's not smart lending. I think the PPP loan solves a lot of people's immediate needs for their business.
Who've been in business for how long? Because even for the PPP, you need to be in business for 3 years.
2 years. Yeah.
And so, of course, you have to do your taxes and all that stuff too in order to qualify.
Sure, you have to show an income and show your payroll and show your rent paid and profitability. You can't just have a business and then not have any activity in it. You also need to have a domain. So if you have an LLC, every bank asks for now, what is your domain? Domain, like your website. Like jeffvannote.com. Like if I'm applying for a loan under Jeff Van Note, they're gonna be like, I'm gonna give you an example. If I was a business, they're like, what's your website? So like for my podcast, I have Deposit That LLC. I made depositthat.com because if I ever apply for business credit, I need to supply them with my business domain. They want to make sure you have an e-commerce site as well. Oh, wow. You see, I didn't know these things. Yeah, so these are what banks are all looking for now. Right on the first page of every application, it says, what is your business domain? So
when you go to the business domain, you go to the website, do you have to take payment through the website? Is that what it means?
No.
Okay, so
You
what
just need
does
to have a website. You need to have an actual website. Like,
just,
again, for example, my podcast, Deposit That.
mm-hmm.
Deposit That LLC owns Deposit That. Deposit That LLC owns depositthat.com, which is just my podcast website.
Okay.
It's an
Okay.
actual business. I generate revenue, obviously, from my podcast. So, I purposely did all those things because I know what banks look for. And they just implemented that like early last year before COVID happened because people are obviously doing a lot of business. And it's kind of like their way of like validating that your business is in existence. They look at a real business today as actually having a website.
Yeah. 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 And of course, you do a DBA for whatever business you're doing that is totally fine.
You could do a DBA, absolutely, but as far as helping people out right now for business loans, I secured an orthopedic surgeon $500,000 of working capital last year. Construction companies, like if they have accounts receivables, I have banks that fund accounts receivables. Truck drivers that have, a couple trucks out there, maybe they need some money up front to make repairs or expand their business. We do all those types of loans. Some rates are very high, 20, 30%, because those are what merchant advance loans are. And then we have regular term loans that are as low as like 5.5%, 6%. It really depends on, again, what your tax returns show, your business model, and the type of person you are. And then also your use of funds. What do you need the funds for? If you need the funds to buy a house, they're not going to give you the money. If you need the funds to, upgrade your space and get proper equipment, yeah, it's easy.
Well, here's the thing. Here's when looking at the credit report, maybe, I mean, for that type of loan, you have to look at the credit report, correct?
Yeah, for business. Yeah, absolutely. All commercial bank loans require credit reports. Absolutely.
Because when you talk about, you got to make sure that this money is being used for this. Some people may owe on their taxes, and it's going to show that they have a tax lien that they owe money on,
Absolutely.
and they're borrowing money just to pay the taxes. Which I'm pretty sure you've seen crazy stuff. Someone is asking, what is the usual or average turnaround on your hard money loans, and do they have to have an LLC?
So I gave you the example of, I got a call. I think I posted this. I got a call Saturday night at
Correct.
7 o'clock.
Yes.
And I funded the loan Monday morning at 10:30 a.m. So as long as it's not, a multi-million-dollar deal where I feel very uncomfortable or I don't want to rush to making a decision, if it's $100,000 or $200,000 and you need to close as quickly as possible, your lender drops the ball, whatever, something happens and you need to close, I can close the deal in 24 hours. Like, that's not a problem. Like, I could definitely do that. I could even close the deal same day, so long as title insurance is reviewed and everything's cleared. Again, as far as an LLC goes, I will lend to a personal name. I will also lend to an LLC backed by a personal name. And again, if there's construction going on, then I require it to be an LLC. However, I'll give you an example. Let's say you're buying a $200,000 property to fix and flip, and let's say your fix and flip lender that told you they were giving you no interest on your fix and flip loan, as an example, right?
Mm-hmm.
And you love them, and then you're supposed to close tomorrow, and they say, oh, sorry, we can't give you the money anymore, and now you're like, what do I do? If you put, let's say, 25% down on the house you're purchasing, I'll lend 75%, so I'll lend you $150,000 in a no prepayment penalty loan, and then I'll help you get your actual fix and flip financing. So I can come in and eliminate the fix part and just get you into the acquisition and then get you.
You kind of cut off right there, but go ahead. Can you repeat that? I'm sorry.
Yeah. So let's say, for example, you're buying a $200,000 house.
Yep.
If your fix and flip lender drops the ball and you need to close, if you put up $50,000, I'll lend you the $150,000 difference. We'll close it as a regular private mortgage, and then I'll help you get the construction financing after we close and you solidify your investment. What I don't want to have happen is you miss out on that investment opportunity because your lender dropped the ball. So my goal would be to just get you a loan to close on the property, to close and solidify the home, and then we could figure out the construction post closing.
This is, I mean, like a 203K loan, which is a construction loan when you purchase a property. I mean, people who don't
203K loan is just for private residences, but yeah, yep.
private residences, correct. But you also, no, you only do investment properties, correct?
So I don't do any residential mortgages anymore.
Okay.
I work with some local banks that I have consulting agreements with that I train their loan officers. And in return, I send them business depending on who has the right loan product for my consumer. So I spread the business around depending on, again, who's busy, who has the lowest rates, who has the best service, what state is it in, so on and so forth.
You're constantly
But I still
cranking
do
numbers. You're constantly
day
cranking
long.
numbers
All
to
day
say,
long.
all
All day
right,
long.
I can't help you, but let me see if this person or this company can help you, and they're gonna charge you
Correct.
this and this, and of course I'm gonna put you in the best situation so you won't get, hit up over the head with high interest rate or whatever. Because I see that a lot of times you talk about relationship with people.
Yeah, I mean,
so
again, so like,
go ahead.
yeah, I mean, like my thing is like I have a ton of pride, and I want to be known as the expert, and I hate being wrong, right? So like when I publicly state something, right, like I could back that up with proof and validation. I don't just speak to speakers, speak to try and be smart. If I post something, it's because I 100% firmly, confidently believe in it. So if I'm referring you to somebody, you better bet your butt that like you're going to the right person, because it means more to me that you got the right deal than me referring you for the wrong reason.
Correct. I got someone here that also is asking, is rehabbing or upgrading a home considered construction?
Yes, technically, yeah. If there's anything where you need architect plans or permits or swinging a hammer or needing to do plumbing and electric, that's liability. So that's the reason why I require. God forbid something happens.
You said you cut off when you said that's the reason you require. You cut off when you said that's the reason I require. Do you hear me?
I think I froze.
No, you're fine. I could, you're fine. Hello? Having technical difficulties, my friends. Hold on. Anyways, it's fun time over here. Okay, there he goes right there. Okay, you good?
Yeah, I'm good. Sorry about that.
Okay, you said something about. Now I forgot my train of thought. Can anyone here in this write on the comment what I was talking about? Like, Jesus Christ, I can't believe this.
Next time I'm gonna lock myself in a room so that way there's full lighting, full audio, full
Nah,
Wi-Fi.
it's all good. It's all good. Got
I'm in Yorktown Heights, New York right now. I had to meet with a client, so that's
Yorktown. How far is that up from New York City?
So it's about 50 minutes north of the Bronx.
Oh, that's not bad. That's bad.
No.
In reference to rehab. Oh, you were talking about the rehab.
Yeah.
Yeah.
So
In reference to rehab.
A rehab is construction. Anytime you need to swing a hammer, painting is not rehab, so that's not big. But like when you need to repair electrical or plumbing or roofing, or permits or architects, that's considered really rehabbing. If you're just going in and like painting the walls or like mowing the lawn, then I'm not going to break your chops about being in an LLC.
Okay. All right, my friends, you hear it here. I mean, listen, every time we're about to like say, peace and go and enjoy your night, we get questions. So I don't mind
Look,
them.
I want more questions. I can sit here all night. I'll come home at 2:00 in the morning. As long as I'm getting asked questions, I can answer questions all day long, man. I love it.
No, believe me. If I put that we're gonna do this again, I'm pretty sure people would love this because they need to know this. Yeah, I got somebody else right there. It says, and you do not fund fix and flips on residential properties. No, he doesn't.
So I personally, with my own capital, our own capital, I do not fund. I broker those loan products, and I deal with 10 different institutions that give me terms. So when you come to me, I charge you a 1% fee, and then I shop your deal with 10 institutional fix and flip lenders to get you the best deal. based on what your parameters are. So I don't cut the checks for them. I broker them, but I control over them by choice because I don't like that product. I don't like that process. I don't want to have to manage hundreds and hundreds of thousands of dollars of construction, to be honest with you. It's just not something that interests me. I don't know construction. That's why I personally choose not to fund them.
Boom. There you go. There you go. So yeah, Jeff, I mean, look, we could do this again. I would love to. Every other day you post a story that I'm like, damn, that's a great story for a podcast. Just to explain, because a lot of people don't, when you post your stories, people would think that, you're not going to be able to get those things done, but you get them done. And you're like, and I was able to do it. Boom. And the crazy stories are when they come on a Friday that you funding by Monday, which is crazy because you got to dedicate time into learning about, who you're dealing business with or just what you're going to get into. And then you also talk about you need to speak to your attorney to make sure that everything is legit. And on top, people are working the weekends in order to do business with you. And by Monday to have that money, that's crazy.
Yeah, I mean, look, but don't forget, like, I've built my team, and there's been a lot of losses, and there's been a lot of great new additions. I've been building. I let anybody get a shot, but in order to be on my starting roster, like, you need to deliver the same service and expectations that I deliver. That's what makes a great team, in my opinion. What I do want to mention to everybody is I have my book coming out, my second book, on March 7th. It's called the Realtors Cookbook. Everyone's posted about how to get leads. And again, I've generated 100% of my own business, both ground and pound in the field and socially, digitally, as of 2017 to test that market, to, trial and error it. So I've done both full ground and pound, full social media. Now I have a hybrid. It's called the Realtors Cookbook. It's coming out March 7th. And my first book that I wrote, which I wrote it back in 2018, so it's a little bit outdated, but the underlying principles still apply. It's available on Amazon. It's called The Mortgage Playbook for Millennials. Not to tip anybody else off, but I actually will be launching mine and my partner's real estate tech platform called Reverify. It's Reverifi. Oh man, I'm gonna leak it. It's a full operational online offer management for real estate. So you submit your offers online, digital. Sellers get to see their offers in real time. You can counter offer, sign everything right there. It's a full transaction portal, and it will be available fully in English and Spanish. So
dope.
A lot of people who only speak Spanish or Spanish is their native language are at a disadvantage. So we brought a product to the market that's a bilingual product for everybody to feel comfortable buying and selling real estate.
That's dope. I have a question here, and I don't know if you can see it. It says, I saw a house I like to buy. I don't want to lend her. I want to deal with you, the broker. Can't you purchase it and pay you set of a third party? It's kind of a hard question. If you could rewrite the question, kind of hard to understand. Okay, can you see it there, Jeff?
Look, if I was 33, I think I could see that, but now I'm 34 on my phone. My eyes don't work as well, man.
Yeah. If you could rephrase Ladoni, if you could rephrase your question, because it's hard to understand. If I saw a house I like to buy, I don't want to lend to her. I want to deal with you, the broker. Can't you purchase it and pay you a set of a third party? Yeah, that's kind of confusing. If you could rewrite it so I can have Jeff answer it. Okay, there it goes right here. I apologize. I want to pay the broker to purchase the home. I don't want to deal with a third party.
So maybe she's saying that she doesn't want to negotiate. She wants to pay a broker to negotiate.
Is that what you're trying to say, Ladoni?
we could even do maybe a private message on Facebook or whatever we're live on here. Maybe we could do it
Yeah,
privately. So
yeah. We could do it privately. If anything, you could email me the question. My email is in the body of the YouTube and the Facebook. This is coming off a YouTube comment. So just go to the body. GizzyCredit at GizzyCredit.com is my email address, and I could definitely make sure that Jeff gets the question and answer it for you. But no, Jeff, I mean, this is the first time we done this, and I get a lot of real estate people. Also, the you said you had a truck drivers. Why would a truck driver need like hard money?
So that's more of like a business loan that we would give on something like that.
Okay.
Not necessarily hard money.
Okay.
But truck drivers, they're hard workers. They make a lot of money. And a lot of them have future contracts of deliveries and stuff.
Mm-hmm.
So let's say, for example, they have no business for January, but for February and March, they're going to make $10,000. Maybe we'll advance them $5,000 against that $10,000. So when they get their $10,000, they repay us. As an example,
okay,
something we would look at.
Okay, so LeDon just said right here, yes, I want the broker if they have the funds to buy the property for me, and I pay them instead of a mortgage.
Yeah, that's not really how that works, unfortunately. The rates are much higher. You're much better off going and getting a mortgage. That's just the cheaper, most cost-effective way right now.
Mm-hmm.
Interest rates are at 2% or thereabout, maybe a little bit higher.
Correct.
Right now in today's market, I would advise you to deal directly with the bank to get you a mortgage at the cheapest cost.
Yeah, I think it's going to be the cheapest way to go about it.
Absolutely.
Because right now interest rates are so low, and FHA, if you could get 620, 640. I mean,
I still have lenders that go down to 580, believe it or not.
So even 580. So what's the difference between a 580 credit score and a 620 credit score on an FHA loan?
Everything. Really, it boils down to, Wall Street. So Wall Street runs pro formas on delinquencies, and they've found that once you drop under a 620 credit score, and don't quote me on this number, I'm just giving an example so everyone understands it.
Okay.
If you're at a 620 credit score, mortgage. If you're at a 619 credit score or under 620, you're at 50% chance that you're going to pay your mortgage. So it's all based on statistics. So they find that plus or minus is at 620 mark. So anything under 620 is very heavily scrutinized, and they find that the majority, the bulk, 90% of their loan defaults, delinquencies, are on credit scores under 620. So that's where that threshold came in. When I came into the business in 2007, there was no credit score requirement. You could have a 480 credit score and still get an FHA loan.
Whoa, those were the days.
So it went from, to give you the full step up, it went from no credit score requirement to 550 to 570 to 580 to 600 to 620 to 640. And then at one point in 2011, the credit score requirement was actually 660, and then that dropped back down. So now it settles right around 620 to 640. Yes.
Well, my people, got Jeff Van Note. I'm going to leave all the Jeff Van Notes in the body of the text. His book on Amazon, I need the link, Jeff, when you send it to me, so people could go and purchase not only the book from 2018, but also the book that's coming up. They could pre-order. Definitely, I want a copy of it too. But make sure you send me that info by email. I'll write it on the body text of my email address. Of course, if you guys are looking for PPP loans, he's one of my contacts for that. Just come through me, and I'll definitely put you in contact and give you the link so that you could go out there and get this PPP loan. So that's going to be the best thing for you guys. We're talking about the PPP loan, how to go about it, the link and all that, so people can go out there and do it. If you're looking for Jeff Van Note to finance a deal, or of a real estate investor who's looking for more financing, what state is the state that you won't take business from?
So look, right now I'll look at deals anywhere, but my primary focus is on New Jersey and New York.
Okay.
That's where my network is. That's where people need a lot of help right now. That's where people I actually physically know and touch are. So I want to help my immediate surroundings before I go out and help, strangers out of state. It's not to say I won't, just I have a more invested interest of helping our local communities and markets where we all live, because that's where we have to wake up every day. So call it giving back, call it local, call it whatever you want. I don't ever turn anybody away, but at the same time, I'm best utilized, locally.
Okay. All right, Jeff, thank you so much for today's podcast. Thank you so much, my people. Jeff, I'm going to see you on Facebook. And definitely
I'm
thank
sorry
you
for
so
all
much.
the technical difficulties on my end. I apologize to everybody. If you actually want to see what my face looks like, go to my Facebook. I drop a new podcast every week. It's called Deposit That. It's on the iTunes store, but my YouTube channel is depositthatyoutube.com. Really, really cool. Have a ton of entrepreneurs on there. A lot of real estate, money-related people. Hopefully, you'll find value in what we put out. So I appreciate you having me on.
No, thank you for having me on. You have your own thing going on. I love it. And, thank you so much. It adds more to the value that I add to people when they're looking for information and education. So my podcasts, I always put them as education when you look for them. So thank you so much. I appreciate you very much. And, let's do this again sometime.
I'm open. Whenever you want me, I'm here for you guys.
That's what's up. Thank you so much, Jeff.
Thank you again. Appreciate
See you later.
It.
Peace. All righty, mi gente. Let me see. Okay, come on. Let's go right here. Okay. So how do I get off of this? Okay. Let me see. There you go. Mi gente, how you doing? Thank you so much for all the questions that you guys have. That's Jeff Vano. I'm going to leave all his contact info below. Thank you so much to the people who are still here. I'm doing things differently this year. Yes, I still have John and me communicate on a daily basis every day. All right. But, I want to have other people on and, other people for education. I got the vehicle loan, the used, new. It's not a new car. It's a new loan, right? It's a new used car loan program, okay? Learn more about it on my GizzyCredit podcast. So right here, let's go right here. Let's go right here. Let's go to the channel. Okay. Let's go to videos. It's right here, mi gente. Okay, here we go. See right here, I got my friends that I deal with the car dealership, and they have 3 car dealerships in the New York, New Jersey, Pennsylvania area. Okay, the main dealership that they are in is in Monmouth County, Red Bank, New Jersey area. That's in the middle, southern part of New Jersey. They got a big auto loan. I believe we're going to be going live on Saturday with them. They have an ITIN number program. People who don't have, are not residents or are not citizens of the United States, but they do have a working visa or have a working number with an ITIN number. They could purchase vehicle for themselves or for their business. So definitely you may want to tune in for that to explain that. But if you're looking for a used car leasing program and you don't have the best credit, make sure you hit us up. You get $500 discount when I referred you over to them. So that's what's up. Any questions more that you may have, I will be here for you guys. Thank you so much again. Your boy GizzyCredit. And see ya later. Yay.
Don't get scammed. What you need is just a change of plans.